Hello, traders, and happy Monday. It's 8 a.m. Chicago time on the 26th of October, 2020. This is episode number 1865. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off across the board. The leader today is the U.S. Treasury bonds, the 30-year bonds. Trading up 28 ticks, almost a handle, followed by the dollar index. The dollar's up $30, 30 and a half cents, trading at 93.07 on the futures. The 10-year note is up 6.5 big ticks, while 13 small ticks, and the Bund is up 3 ticks. The laggard today is crude oil. Crude oil taking a little bit of a beating, down $1.11 at 38.74, down 2.79%. Can you all hear me? I'm seeing that there's no sound. It looks like it's okay. The DAX is down 342 points, 342 points, or 2.71%. There's still an issue with this Brexit talk, and also um, it looks like there's just a tough recovery ahead, given the numbers that just came out over the weekend with COVID-19, not only in the United States, where we're reaching um, record levels, but also in Europe. Things are looking kind of grim, especially as we come into the winter months, where more and more people are going to be indoors, and it's just who knows what that's going to look like. In any case, the DAX is the index that's leading us down. The U.S. indices, the Russell's weakest, down 21.1 points or 1.29%. The Dow's off 318 points. The S&P 500 is down 35.75 points. We are currently gapping down. The Nasdaq's down 101 and a quarter points or 0.87%, and that's where we stand. Gold is almost unchanged, trading at 1902 and 90 cents, down $2.30 or 0.12%. The calendar, what's driving this? Who knows? But a couple of headlines that coincide with the drop, the key of which is that China is imposing sanctions on U.S. firms over Taiwan arms sales. China will impose sanctions on Lockheed Martin, Boeing Defense, Raytheon, and other U.S. companies it says are involved in Washington's arms sales to Taiwan, a foreign ministry spokesman said. This came out at about 2 Central. This came out at about 2 Central, and we see that the market, which coincides with the European Open, and we see the market just getting hammered at that point. So that's where we stand. That coupled with the lack of stimulus and the discussion of stimulus still, I think Kudlow, White House economic advisor Kudlow, just came out and said that the stimulus talks have slowed but have not ended. And that's going to remain in focus for the rest of the week, in addition to various economic releases. Plus, the WTO just approved $4 billion in tariffs from the EU for non-competitive practices by the United States. So anyway, all of these are kind of being put together and are causing the market to move to safety this morning. So that's where we stand here. We had made some important strides on Friday in the ES that I was going to talk about, but that was a lot of that was wiped out by the overnight session. Here's what's expected for today. We did get the IFO business climate out of Germany this morning. The consensus was 93, forecast at 91.1, came in at 92.7, so a slight beat-ish there. We got new home sales. We're getting new home sales at 9 Central, 10 Eastern, and Dallas Fed at 9:30 Central, 10:30 Eastern. And then that's the end of that. Today is China's having its Communist Party annual meeting, And Jinping, the Prime Minister of China, has had put out their 5-year plan on how they're going to deal with this current situation. So, be interesting to see what they've got on deck. The week has durable good orders as far as high impact numbers for the week. Durable goods orders expected out of the U.S. tomorrow. And then we get the rate decision from Bank of Canada. We get crude oil inventories on Wednesday, but that's it. And then on Friday we get Thursday we get consumer confidence out of Japan. We get the GDP growth rate out of the U.S. And the ECB rate decision on Thursday as well. And then Friday brings us to GDP numbers across Europe, France, Germany, Spain, and the Eurozone, as well as Italy. US gets its personal income, personal spending on Friday, and Friday evening MBS manufacturing PMI out of China. This is what we've got going for us this week. The main thing that we have to look out for is the news-based, news-driven events that involve stimulus, and the COVID numbers are likely to drive the market as more and more states are locking down or mandating uh, mask wear. Uh, a lot of these states are going to have to do, and countries really are going to have to do something more stringent to get ahead of the curve as they did back in March and April. Here's what we had on Friday. Friday, we gapped out, we gapped open, saw some drive-ish behavior down. I was not here on Friday. I was on break, and and then we returned to the uh, point of control of the prior day. Remember, Thursday had this really blunt, active price discovery profile with the point of control at the high. We went right to the point of control, came back into the mid right here, mid VWAP prior day's high, as well as the opening swing low, right in the 53 area, held the 53 and rotated over to 45 and then consolidated, retested 53 again, and finally broke through the IB on a week low here. This is kind of nice here. This IB low and then triple IB low here, local, double IB low statistically. And so we expect the break of the low with a nice hold of the mid again. And then finally it breaks through, comes back to the IB, and then continues down this really ugly profile. And so until we came back, broke through the mid and came back to the upper portion of the range. So the profile on Friday shows a little bit of what um, looks like a stable balance with the point of control inside of Thursday's value area, and we held that steady. We closed the week at 34.51 and a quarter last week, and we are basically well below this area currently. So that's where we stand right now. Yeah, the delta played nice with price on Friday. Much of the larger rotations were to the downside until later in the session. Did not look like a super easy trade. Looking back at the price action, a lot of jittery back and forth rotations. Looking into moving ahead into the current session, we open up in a gap right here. We gap down and we have a gap and go situation immediately. This looks like an open drive down. The delta is also supporting that open drive down, immediate push below Friday's low, comes right back and then forms a double distribution. There's one distribution, there's a second distribution, and then it holds steady here until the China news comes in right here, and then it pushes down. And since then, we have been digesting the China news with a third large distribution with the point of control at the low end of the range with a weakish low. at 34.12. If you recall, 34.12 was a stock zone all of last week, followed by 34.05 below. So we are essentially trading the low end of the balance range. If I squish this down and show you what we've done since the selling day on the 19th, last Monday, we have basically sold off on this day. We finally extended the range down in the RTH right here. We had an impulse, consolidation, extension, and then the rest of the day was corrective, pulls back, pushes higher, and then it looked like it was finishing the one-time framing down on the daily. But we are resuming this trend now. It looks like we are pushing to that end of the range. So as I draw a profile here for the composite, let me make sure I've got the dates right here. 30, and then on Friday, yep. So you could see that there's just a really sweet looking balance profile here. Okay, with the point of control at 35.50, it was around 35. I have it marked here as 35. And what we have, let's actually eliminate everything else. And what we have is uh, this market that has moved away from at the top, has uh, also tapered at the bottom, and has formed a really nice point of control at 35 with strong potential that now we're below, strong potential that we put in a higher low. We'll see what today does, but I'm expecting a higher low and a return to 35 this morning. I'm looking for the market to test that low and push back up into 35 to resume balance in this area. Okay, so what this is doing actually is it's making it harder and harder to get above that 70 that we are uh, looking to push through if we are to push back into Monday's high. We are just struggling to get through that 70. You can see the 60 here held. The 60 has been a stock zone for quite some time. So as I turn the stock zones back up, you can see that 60 has been here a while. 68, 70 is the next big area up, and it's just holding this balance pretty well. Okay, so that's where we stand this morning in terms of the order flow. Pretty busy session. We did trade 247,000 contracts in the overnight session, which is pretty decent. It's a little higher than the mode or the common overnight volume currently. And what we've done is we've moved into a relatively solid area here. You can see the liquidity getting smashed before the market decided to bounce back up, and we're holding steady. This impulse down looks to me like it's incomplete. We're likely to push lower. The liquidity below is the next big liquidity area below is really quite a ways. Not seeing anything stable in the book overnight. So to me, the order flow is very muddy coming into today's session. The delta is negative. But overall, I'm not seeing long-term commitments since this drop right here. I'm not seeing really big commitments in the book. We'll see how this changes as the market reopens. Let's get into what's expected for today. Okay, so what are we looking for here? Currently, we're at 34.20. Do you remember 34.20? This has been a big area. The 34.20 was that high area from a while ago, about the beginning of the month. We are in the 34.20 area. I'm expecting it to open, push into the overnight low, maybe. It's tough to tell at this moment, but to complete this impulse down, it's likely to push the overnight low, but I'm looking for the largest impulse being higher, looking for buyers to step in this morning, push back through the 20 and get back into the 35. So I'm looking for a pretty decent pushback into Friday's range, come back into the 35, consolidate for the session before it squeezes into the close. This is the primary scenario. So I'm looking for it to close the overnight low right here, poke through and rotate up. If there's more news that the market wants to value to the downside, we're likely to have an open push back up into the 24, 25 area, consolidate, have our impulse down, and then if we see an impulse down and a push, then we are likely to squeeze down into 3405, 3400, consolidate, poke through before coming back up to close the session. We are currently right at one volatility sigma. The expectation is we would close above it. This gives a better chance at scenario one, and I'm expecting us to come back into this composite balance right here with the 3550 area being the key figure in this part of the profile. So I'm looking for the market to come back up. Key areas, we've already tested the 12, '05 again, '05, 00, and then anything below there takes us down into, most likely would take us down into the 84, okay? And then above, the key areas are 35. That's the big target for today, the expected test area for today. And then from the overnight session, we're looking for 40, 40 up here, 35, 40, 46, and then back to the 60. Okay, so that's the map for today. Hopefully this was useful to you. Good luck today, and I'll catch you tomorrow morning. Take care.